I'm like, the hell I can't. You better let me. Okay, the stream is up. We had a couple people bounce. Oh, don't leave. Don't leave when we get to the harder stuff. We can keep it light. I get it, Glenn. Super appealing. All right. You should be able to see my screen. You should be able to hear my voice. We're going to get things started back up right now. All right. Officially, welcome out to part 2. We just had our intermission. Welcome back to the Market Watch Group working sessions. This is anything goes. Glenn is somewhat restricted. He's got rails to some extent. We got to keep it accommodating to those who are maybe newer, less experienced. Those rails are off. Any questions, option strategies, whatever it may be. Now, been in and out 3 times. Can't see. Oh, the screen share. Is anyone else having a hard time with the screen share? Barry, thank you for telling me. And I'm not. Honestly, it could. Yes, Billy Ray said. Oh, that's 2 people. Anyone else? It says it's streaming. It's going around in circles. Miguel says he's good. Interesting. I've never had a problem with mine being seen. Were you able to see Glenn's, Barry, and you're not able to see mine, or just mine? That'll help maybe troubleshoot this a little bit. And I guess just mine, and same with you, Billy Ray. Were you able to see Glenn, and now you can't see mine? Press said he had a hard time earlier, and then he got it to work. I'm gonna pop out and in one more time. Let me see if there's anything I can do on my end. Nope. Okay, you should still be hearing me. And I'm going to turn my screen back on. Boom. You should be seeing it. Oh, okay. Billy Ray could not see. Oh, now you can. I got one back. Barry. I hope it works. Everyone else seems to be good. I'm going to move on. I did start the recording, so those of you listening at home, welcome. Let's see. Let me advance my slides. Good. Okay, the recording is catching the slides the way it's supposed to. Man, what is going on today? Here's the disclaimers as always. Education, illustrative purposes only. We're not brokers. We're not advisors. We don't give advice. We don't give recommendations. What are we going to do? Let's just keep doing what you were doing. Let's keep talking. Looks like a billboard. Okay. All right. Well, we got through that. Let's talk about it. So, interestingly, today was Thursday, Wednesday, Tuesday, Monday, Friday. Really, since the Fed day. Back here. The next day we got a big push, and then we've just sort of been grinding out a little higher. The buyers are coming in a little bit, not a ton. All right. I mean, there's still opportunity. I would imagine you're still maybe writing some things. Maybe you took some new things. It's a bit of a stall. It is what it is. We have a stall. Okay. What do we do with that? Be ready. It could break out of this stall and take off. It could easily ease back, right? Last time when it first started kind of sideways, it went, so let's just say that was this day here. 1, 2, 3, 4, 5, 6, 7, 8, 9 days, and then it dropped for 4, and then it started going up again. 1, 2, 3, 4, 5, 6. We could have 3 more days theoretically, and then it dropped, and then, right? So, look, all you can do is manage the trades you have. Is there still reason to be in? Do you still have positive reward to risk? Is there still momentum? Is there still room to your profit target? Great, manage it. If you've had things starting to go wrong, tighten stops. Start to take it off. Be ready to figure out how you might do a re-entry. Be water, my friends. We just want to be fluid, right? We're not going to do anything too much. But overall, yeah, there's not a lot of momentum here for the last 5 or 6 days. So if you're like, Scott, my trading has stalled, I'd be like, what? It stalled, you say? Well, the rest of us are just smashing trades like cans. Nah, I mean, the rest of us have the same thing you have. We all have the same thing. It's just kind of grinding out a little bit, right? Okay, fair enough. What else? I am curious. We've got, let me make sure this is up to date. Let's talk about our what's upcoming. We've got PCE tomorrow. What's the expectation? Well, I mean, we're already seeing the Fed show itself more accommodating. What do we have here? Jobless claims. Everyone's like, oh, the economy's weak. That's why the Fed did that. 218,000 jobs. I told you my opinion was outside of triggering the SOM index because unemployment rate hit 0.5% higher than the 12-month low, already fell back down. Nobody accounts for that. Everyone's like, there's weakness in the labor market. That's the only place we ever saw it. Look at the jobless claims. It's right back down to 218. Durable goods orders were supposed to drop 3%. They stayed flat. Minus transportation, they increased. GDP stayed steady at 3%. That's all pretty fine. Is it outstanding? No. Does it need to be? No. We're just saying, look, is it terrible? Like some people are like, oh, it's so bad. No, looks fine. Okay. We had a lot of Fed speak that didn't really ultimately amount to anything. Tomorrow, expecting income up a tick. That's always helpful. Spending down a tick. That's actually helpful too. This is best case scenario. If income can outpace spending, that's helpful. If spending is the other way around, it's bad for us. Spending dropping a little bit, that helps continue to ease inflationary pressures for us. Income growing, that's good as well. PCE expected to drop year over year from 2.5 to 2.3. Further confirmation that we're very close to what the Fed is looking for. Core PCE holding steady. Core is expected to rise one little tick. Okay. It's already expected. If it's more than that, or if anything's different, then we might adapt. But other than that, it looks pretty good. Consumer sentiment coming in at 69. Okay, and next week, what do we have? It's the first week of the month. First week of the month means we get last month's labor numbers, employment numbers. You can see we start with job openings. Expect those around high 7s million. Still well ahead of where they were prior to the pandemic. ADP employment, a little light last time. We'll see what we have this time. Then we have jobless claims, not much else. Then we have non-farm payrolls, 140 last time. We'll see if we get anything better or worse than that. Okay, Fed Watch real quickly. Let's just kind of see. We were wrong. We were all like, hey, we think the Fed's going to be a little more prudent than that. Nope. The Fed smashed it. Slapped it. Half a percent. Bam. Now what? We're back to 50-50. And again, it's not 50-50 hold versus cut a quarter. 50-50 cut a quarter versus cut a half. Cut a quarter, cut a half. All right. That is what we are up against. Let's just talk about it. We checked in with this yesterday. Our posture. Let me grab it. Let me grab posture real quickly. We also said we're going to talk about option log. Sample. All right, let me get some things up here. As I read the chat, everyone looks like they're doing all right. Press is looking for his next trade. Press, did you find it? Do we have anything we need to look at? Not yet. Not yet. Not yet. Okay. Okay. I never know if I need these things. I always say, yeah, show me later. Then I never look. Oh, I shouldn't have done that. Oh, wait. Yeah, that's old. That is old. How is that old? So old. What have I done, you guys? Oh, I lost it? I have to go back into my pictures and find it. All right, I'm not going to waste our time with that. I guess we'll talk about trade logs at some point. We were what, 5.5? That's what I remember. 5.5. I don't see anything changing as of now. Let me know your thoughts. I mean, we technically tested new highs today, but we already scored a new high. We're not scoring this as another new high. It's the same high as it was here, basically. We already scored that. Volume, nothing this week, right? So whatever we had is what we're likely to continue to have. Long term, still just kind of pushing along. I think we're going to just kind of see the same score, which I'm okay with. Like, we're not seeing weakness. Let's look at the VIX. Tell me if there's weakness you see that I'm not seeing or I'm not talking about. Not seeing or not talking about. So you can see we got basically all the way down. We got to here. We didn't get down to here. We got close to that, but that doesn't matter. This is lower low than this low. We're not measuring to this low. We're not like it's a higher low than this one. That one's not relevant anymore. That was already higher, then this one was higher, then this one was low. Like that doesn't matter. So, but do we look at this and say, hey, the VIX is pretty low. It's at 15. It's oversold on the stochastic. We're down at what we would identify as a pretty convincing support level from the short-term chart. Would this be something that if you were going to hold a number of bullish trades over the weekend, that you might say, you know what, Scott, would putting a hedge, a put on over the weekend and into next week, would that be helpful? I mean, obviously, if the market drops, yes. If the market goes up, no. But that's pretty cheap. That's the kind of time when it's like, yeah, you know what? I would think about that if I was carrying a lot. I would want to be like, hey, just in case we start on Monday with a nasty day, I'd like to have some puts on that'll help me just kind of ease my mind as I manage and adjust the remaining trades that are not doing as well. That's the thought process there, right? Okay. And let's go back out. Should we just take a quick peek through the watch list and then we'll go talk about record keeping? Apple. I got to tell you, for me, Apple is still in a nice little flag pattern. It hasn't broken yet. If it pops out of that flag, it's kind of breaking the flag and breaking a quasi cup and handle. It's above the 50. It's looking pretty good. Aflac looks like it wants to try to go. If you were thinking about this, you might change your chart perspective to a Heiken Ashi and say, hey, I could get in this thing, and then as it accelerates, I'm hoping to catch one of these big guys or at least something. Okay. Amazon starting the flag, looking great. We traded this one. Nice trade. Looking for this pullback. Could pull all the way back to here. Anywhere. It's starting. I like it. AXP. Close, but not quite. It looked like it wanted to turn a little bit, but it's close. Some of these that are moving well, they may not give us big consolidations. They may just be small consolidations. Tell me if you're trading any of these. How about Rocket Lab? Rocket Lab, or tell me the other one again. And give me your symbols on those. SoundHound? I don't know the symbol for either of those. Let's see if I can find one before you get it to me. Rocket Lab. Rocket. Is that all one word? RKLB. Yeah. I mean, I would say this. It's got some momentum. You can see it was doing okay. Earnings came out. They did pretty well on earnings. Got higher. A new higher high here. It's tough. I feel like you're a little overextended, right? You're a little late coming in now. I would likely be thinking to myself, wait for this consolidation. I mean, it did consolidate and then bust, but even the fact that it busted so hard, I would have a hard time with that one. But yeah, worth looking at. It's got some momentum. I like that. SoundHound. Yeah, it's pretty lackluster, right? Huge difference between those two. Huge difference between those two. One is trending, showing momentum, looking good. One is just going sideways. It just sort of flounders around. Yeah, there's just not much there, right? Yeah. If I were thinking about it, I would probably be thinking to myself, I'd add one to the watch list. RKLB, but not the other. Let me know if you think yeah. SOUN, oh, that was you telling me the symbol. Got it. No, good, helpful. All right, let's keep going. Where were we? Bank America. Oh, that's close if you like that one. BK, it's consolidated. I think there's some great opportunity developing in financials. I think there's great opportunity developing in industrials. That's all the opportunity I need. Those two are leaders. They can definitely push everything else. Carrier, nice little consolidation. Caterpillar, look at that beast. You magnificent bastard. CL, oh, CL, come on. The defensives didn't love today. CMG, a little overbought. Costco, defensive, a little down. Fastenal in consolidation with the rest of the industrials. I have no problem with that. No problem with that. Gold, overextended. General Motors, maybe. Didn't really get a higher high last time. Kind of looking sideways. I think there's better stuff out there. Google looks like it's in consolidation. It's just grinding sideways. There may still be some downside to this. But we'll see if it breaks out. Goldman maybe trying to move. Home Depot just starting a flag. Some type of a small consolidation after a big move. ICE just never really did much. I'm getting rid of ICE. We picked the better one with NDAQ. Looks like it could be reset. Now, I think small caps showing signs of potential here. Press, anything sparking interest in you? I'm leaning towards industrials and financials. If those sectors, and I would expect that they're going to catch momentum at the same time if and when they do. I would expect that we might get trades at the same time. Could be tomorrow, could be early next week. I would say that's our highest probability right now of setup to alert transitions. Ripening indeed. Indeed, sir. And JP Morgan. JP Morgan's looking a little iffy, if you ask me. What about the health sector? Let's jump down to the X's. I'll start at the bottom and work my way up. Consumer discretionary. I love the momentum. It's very strong, but it looks very overbought. Right? Healthcare. Healthcare kind of did a bit of a double top, weirdly. It failed here, double topped, broke this. It does seem like there's some support. So here's what I would say. I would say this is on a case-by-case basis. If you have some strong healthcare stocks in your watch list that are still maintaining trend, that are higher high, higher low setups, it does seem like healthcare is finding support, but I just think it's lost a little bit of momentum as a group. That's my thought. Utilities, steady. I don't know. Steady. I'm not a huge fan of trading utilities. I don't know what to say. I'm certainly not making a case. Staples, you can see we saw that it was trying and then it kind of hiccuped, but it's still holding support. If you have any defensive trades on, I'm going to give it a little bit more time. I'm not going to bail on it just to have things hold up. Technology, look at technology. Chips, it's kind of a hanging man style pattern, but it's a hanging man that made a higher high today. We have to give credit to the buyers for that, right? We have to acknowledge that. Industrials look fabulous. You can see a couple of red, some may be more than others. Financials did not make a higher high, but seems to be making a higher low. What would I say that looks like? I would say that looks like an ascending triangle, which is a bullish continuation pattern. Yes? Everyone's like, yes, Scott. Heck yes. We all think that too. Got the hiccups. Apologies. Ooh. Energy. I told you we're not worried about energy right now. Lee said, heck yeah. We're not worried about energy right now, and you can see it bounce down. There's nothing that I want to trade. I don't want to trade energy or oil. Materials maybe, gold maybe, oil, energy, no. No, it doesn't look good. It doesn't look appealing, right? Communication services. That looks very appealing. That's making new highs, right? That's making new highs. I think yes, we definitely think that looks appealing. Yeah? Basic materials. You can't argue with that. Or at least it'd be very hard pressed to make a good argument for that. I don't know. What else? Let me see. ASTM. I don't know what that is. But hell yes, I'll look at it. Astrum Biosciences. ASTM. Did I get that right? Because it's not giving me a good quote. AST. Biotherapeutics. Huh. I can't find them. All right, let's get back to the list. Let's get back to it. Nope. Yeah, I think we could see trades tomorrow, to be fair. Where would those trades be? KKR, maybe. Coca-Cola's holding up. Don't count the defensives out. MasterCard, maybe. McDonald's. Look at McDonald's. Just keep on going. Keep on keeping on. Mickey Donald's. Meta. I think Meta needs to consolidate. I don't think we can trade into it that high. MMM. You can see MMM still showing some defensiveness. Some bullishness. MS. Microsoft. Oh, Microsoft is close. Just because the buyers took a little stab and then they didn't like it and pulled back. I still think it looks very good. Very close. NDAQ, we already talked about taking profits on that one back here earlier this week. And now you are starting to think that maybe a new trade is showing up. At least that's what I'm thinking. Netflix is pulling back. Nvidia is holding up, but it hit some resistance or got close to resistance today. A little scared. PGR pulling back. PLTR pulling back. I saw someone like, oh, they don't like PLTR. I'm like, I don't know what you don't like about it, but I think it looks fabulous. QQQ is up. Tech is coming back into favor. Mortgage, RKT. I'm going to get rid of this. I don't think I would trade this. It keeps bouncing around. I don't like it. RTX. I don't like this one either. I'm going to bounce that. Let's clean this up. Let's clean this mess up, you guys. Tesla overextended. TSM still looks fantastic, but it's up near resistance. UMP is a dog. Nothing there for us. USB. Okay, there's better in financials. UUP looks fine. How about Walmart? Made a little move, already kind of pulling back a little bit. Interesting. Interesting. Okay. Did I miss anything? AST Space Mobile. Let me try. Clint is trying to solve the mystery. Dun-dun-dun. Drum roll, please. Ooh, yeah, that thing had some momentum. That looks like the kind of thing press might like. It's kind of dogging out now, though, right? I mean, it's in consolidation mode. It's breaking lows. It's breaking the 50. Yeah, I would say, yeah, be patient. This will give us better. It will do more than it's doing now. Let's talk about record keeping. This is what we're after. This is what it looks like. This is what it looks like if I have 100 trades. I can come in and see 25 trades at a time. I can see what the beginning day. Oh, they went from January 5th to March 10th. I could see that my return for that period of time was 11.6%. I could see that I stayed in trades for an average of 5 days for winners, 4 days for losers, and if I stayed in an extra 3.5 days. If I had a $50,000 account and I was risking 2% per trade, that's $1,000. Well, that was about right. My average loss was about $1,000, so that was okay. That's just context. Then up here, I can see the breakdown. How many trades did I have? How many were winners? How many were losers? I was only right 44% of the time, but my winners were 1.78 times the size of my losers. And the combination of all that creates an expectancy of 22%. Is that an outrageously high expectancy? No. In fact, when I work with people, I say first goal, 20%. Second goal, 50%. If you get to 50, then you should be optimizing your risk. So it's not outrageous, and yet in less than a quarter, it made 12.5%. No. How much did it make? 11.5%. It can help me understand my risk levels. Now, that's one quarter. Then what? Then I look, and it's the next set of trades from April until July. Really not great. Net profit, $22. Really? Come on. That's it? That happens sometimes. It's okay. Maybe that was a terrible quarter. Maybe if I look at that period of time, there was a big correction. There was a big correction. The market was down 12%. If the market was down 12 and I didn't lose anything, I'm not going to look at that and be like, what's wrong with you? I'd be like, yeah, well done. Well done. Remember that we have to assess relative to what the market did and what we thought the market would do. What else? I was right more often. Now I'm right 60%, but my winners were smaller than my losses. So this thing was just a wash. Right? Okay. What do we do? Nothing. Learn from it. Keep on keeping on. Next set of trades. What happened? We were able to maintain a higher percentage. Our reward to risk picked up. Not a ton. Back to 1.6. And you'll notice our expectancy. So you'll notice just being right a little bit more with the reward to risk not quite as high, but still pretty high. Now you're at a 45% expectancy. Wonderful. Wonderful. What does a 45% expectancy give us? That's a $9,000. Well, it's about a quarter again. July 1st to October 10th. That was a 16% return for that period of time. I hope you can see how much having this information would be helpful to assess, to know if things are right, working, not working, to be able to to go in and be like, hey, what happened? Well, I'll tell you what, our reward to risk ratio was shit. It can't be 0.67. It's got to be 1.5 or better, right? Even if you're right 60% of the time, you can't have that. It's clear what you need to do coming out of that second set of data, trades 26 through 50. It's clear what you got to do. This is data-driven trading decisions. Then you can see we had one more quarter. Are these available? Well, remember, this isn't helpful other than a representation, right? The spreadsheet, a blank one, is available for you, yes. And it's only helpful to get in there and get your data in there. But yes, there's a stock and an option of these. All you have to do is come in to the trade log and fill it out. And you're only filling out this part right here and maybe this part right here. So you do this part before, when you first take the trade, exit 1, exit 2. Just stay current with this, and it gives you this, right? I want you to see the carrot so that you come in here and do the work to get this. Now, look at this, because you'll have a story just like this. Just like this story. Tell a story. Last little bit, you can see it was okay. You know, the reward to risk ratio stayed a little above 0. Percent winners was a little better, though this was barely better than 50-50, and yet we still made $3,000. That's what I want you to recognize. We don't have to be astounding traders. This is barely better than a coin toss, and it still made money. Still got a 9% expectancy. Still ended up making 4.3% return. Now, at the end of this is a full year's worth of data. So this guy does 100 trades in a year. Is that a lot? No, that's only 2 trades a month. A week on average. 2 trades a week on average. Is this guy right an astounding amount of times? 53% of the time. 53% of the time. So his winners must be so much bigger than his winners. 1.24 to 1. And yet it still produced a 19% overall expectancy. 19. What did I say we're shooting for? 20. What did it produce? It produced $17,965, which, as a return for the year, 35.9%. 35.9. How's that going to do for you? Well, if you're trying to get to retirement, that gets you there sooner. And if you can provably establish that you can make 25 to 30% a year, no matter what. Not every year, but look, this should feel realistic to you, right? This should feel like, yeah, I can do this. I could be right 53%. That's barely better than a coin toss. We are shooting for 2 to 1, but at the end of the day, if I only produce 1.25 to 1, am I going to be okay? This tells me that I am. Right? And that when it's all said and done, if I did this again the next year, well, let's look where 36%, 10 years. Let's give it 10 years. $50,000. At the end of the first year, $68,000. That's pretty good, but you're like, are you retiring on that? Not yet. Here's the second year, third year, fourth, fifth, sixth, 7, 8, 9, 10 years. 10 years, starting at $50,000 with no extra money put in. 10 years. Yeah? And now, at year 10, if you have developed a way to get 35%, how much does 35% get you? $384,000. Okay. Yeah. That's the carrot. Does it feel, I hope it's a delicious looking carrot that you're like, and That's in 10 years, you're starting with more. Maybe you're contributing. Maybe you're able to get even better than, maybe you can get that expectancy and get 3 trades a month. If you maintain the same expectancy, but you have 50% more frequency, guess what? You make 50% more money. That's how trading works in our favor. I hope that's why you're here. It's worth it. All we got to do is figure this out. Figure this out. Everything else is going to be fine. Okay. That's why we're doing record keeping. So please participate. Go get this log filled out so you have this dashboard. Now, once you have that dashboard, everything else becomes a little bit more insightful. Okay. Well, that's it for me. Bat and clean up for Glenn. I hope that we carried on. Press is looking for trades. I'm with him. I'm definitely looking to find those in a couple of areas, particularly industrials and financials. They look like they're setting up and they're in the trend. So, all right, here's the schedule. Tomorrow morning, Glenn will pop on 15 before the market opens. He'll be on until the first half hour. I'll be on for the last 45 minutes of the market. I hope you can join me. Have a great rest of your night. And as always, happy trading.